Gold went under. Yongkun Gold has been exposed, with the involved amount reaching 2 to 5 billion. One victim's family saved over 20 million across 3 generations and invested it all, only to lose it all. The gold boss hasn't been caught. They are already in a mansion in the US, living it up with brandy in hand. Now I'm starting to be glad I bought a house. At least I have half left. At least I still have somewhere to live. Wealth management has risks. Invest cautiously. Stop thinking about getting rich without working. Those who bought high in 2018 and 2022, weren't they just hoping to get rich overnight? And what happened? This is a trap designed specifically for ordinary people. After suffering once, I learned, nothing is worth risking in life for except your health. Even if gold rises to 10,000 per gram, I won't envy it. I won't touch it. Because every market cycle, there will always be someone who falls into the trap.
Recently, China's well-known Internet plus Gold plus Finance investment service provider Yongkun Holdings was exposed when multiple stores suddenly closed, leaving tens of thousands of investors in a panic, unable to seek compensation. The Hangzhou police have filed a case against Yongkun Holdings for allegedly illegally absorbing public deposits. Initial investigations reveal that this is a large-scale fundraising scam disguised as a gold investment scheme. The actual controller of Yongkun, Wang Guohai, is rumored to have fled to the US, and the stores have begun closing gradually since May 20th. According to Chinese sources, this case involves more than 12,000 investors with an unpaid amount of about 2 billion RMB. The total funding gap could reach 4.1 billion RMB, including principal and promised returns. It is the largest financial platform explosion event of 2025 so far. The most controversial aspect is that the collapsed Yongkun Gold had once been promoted in advertisements by the Chinese state media CCTV, which further fueled the public's misplaced trust and stirred up public opinion. Yongkun Gold directly exploded. Today, I saw a video from a girl on the social platform Little Red Book saying her family invested 20 million and now she can't withdraw a single cent. It's terrifying. All those who say they will help you make money are scammers. I remember when I just graduated during the P2P craze, I only had 2 or 3 tens of thousands, all earned from tutoring. Back then, I knew nothing about wealth management, and when I saw these high return platforms, I was tempted. At first, I only invested 8,000 RMB. I saw online that some people said it would collapse, but I didn't believe it. I tried withdrawing 400 RMB and it worked, so I thought others were just fear-mongering. Later, I saw my account grow every day and I felt so happy, thinking I was the chosen one. But a year later, the platform went underwater. What's even more outrageous is that after the collapse, someone immediately added me on social media saying that if I paid a little money, they could help me recover my losses and pulled me into a so-called rights protection group. In reality, the group was full of scammers and I was the pig being slaughtered. Luckily, I had seen similar experiences, so I immediately left the group and deleted them. But still, people kept contacting me using different methods, trying to scam me again. So all the platforms claiming help you make money and high interest return principle, most of them are traps. It's more important to prevent your losses in time than anything else. Since the end of May, Chinese social media has been flooded with numerous complaints from investors in Zhejiang, Fujian, and many other regions. They invested hundreds of thousands, even millions, in gold with Yongkun Holdings, but now they can't withdraw any funds, and Yongkun customer service phone lines goes unanswered. Recently, an announcement circulating online claiming starting from June 28th, batch payments for investments below 500,000 RMB will be made, has also been confirmed to be fake information. Reports said that on June 18th, dozens of victims gathered in front of the Hangzhou city government to protest, but they were forcefully suppressed and dispersed by the police, with some facing punishment and even detention. Meanwhile, many investors have continued to speak up in various online rights protection groups demanding compensation and accountability. According to the company's official website, Yongkun Holding was established in 2014 with a registered capital of 102 million RMB. It claims to be a domestic Internet plus Gold plus Finance precious metals investment service provider with 5 major brands under its belt, including Yongkun Supply Chain and Yongkun Gold. According to multiple mainland media reports over the past decade, Yongkun Holding has opened more than 50 stores nationwide under the Yongkun Gold brand. However, on May 22nd this year, the Hangzhou Police Bureau suddenly issued a case notification stating that personnel from Yongkun Holdings were suspected of illegally absorbing public deposits. On the day of filing the case, the freight elevator passage at Yongkun Holdings headquarters in Hangzhou was blocked and seals were placed on the doors. On May 23rd, the Hangzhou Commercial District Market Supervision Bureau also listed Yongkun Gold's parent company and its subsidiary on the abnormal business operations list. So, how did Yongkun Gold win the trust of so many investors and successfully collect large sums of money? Many victims interviews stated that they trusted Yongkun Gold mainly because friends repeatedly recommended it. A victim's family member from Hezhi, Shandong, said that Yongkun salespeople often visit their homes carrying gifts like rice, flour, and oil, promoting so-called high-return gold products. In addition to frequent gift-giving tactics, Yongkun Holdings in the past decade consistently paid high returns on time, regularly depositing both principal and profits into investors' accounts, creating the illusion of safe, no-risk investments. This apparent stability led many business people, state-owned enterprise employees, and elderly individuals to trust it completely, pouring in more funds and continuing to invest even more deeply as time went on. What's even more shocking is that in order to gain the trust of investors, Yongkun displayed insurance policies co-insured by multiple insurance companies including Ziking Insurance, People's Insurance Company, and Taiping Insurance, claiming that the insured amount for the gold assets was as high as 4.1 billion RMB. Moreover, Yongkun Holdings had previously claimed that it was a council member of the China Gold Association, a partner of the Shanghai Gold Exchange, and an outstanding financial enterprise in Zhejiang province. These seemingly authoritative official backgrounds combined with years of operational history and a nationwide retail network made many investors believe in Yongkun Gold and invest large sums without hesitation. In fact, as early as the end of 2024, the issue of Yongkun's delayed payments began to surface. The delivery period of gold bars, which originally took 1 week, was extended to 1 month, and the T+3 settlement also began to experience frequent delays. By the beginning of 2025, investors were already reporting difficulties in withdrawing funds. In May of this year, as gold prices soared, a large number of investors tried to liquidate their assets for profit, triggering a run on the company. On May 20th, the company's financial chain completely broke down and the payment crisis exploded in full force. By May 21st, many investors discovered that the assets they had stored with Yongkun Holdings could no longer be redeemed. Many victims recall that when they angrily reported to the police station, they initially thought they had lost the most money, but to their surprise, they saw many others there who had lost 4 to 5 million RMB, or even more than 10 million RMB. As the number of victims grew, they gathered together and identified more questions. How did Yongkun Holdings suddenly collapse? Had they already moved most of their assets? Should the insurance companies that once insured their gold business now take responsibility? What worried investors the most was whether the gold custody that Yongkun had long claimed actually involved real gold. Were the gold bars they bought they owned real physical assets or just virtual numbers in an app? Was this in fact a full-blown Ponzi scheme? In reality, Yongkun's so-called sudden collapse did not happen overnight, but was the inevitable result of a long-standing fragile financial chain and accumulating risks. The root cause lies in the use of a typical fund pool model where new investors' funds were constantly absorbed to pay the principal and return to early investors, essentially engaging in robbing Peter to pay Paul. To draw in more customers, Yongkun promised high returns and guaranteed profits, which increased its financial strain. By May 2025, a surge in gold prices triggered a mass withdrawal and the company couldn't keep up. To make matters worse, its inventory was revealed to be fake, with so-called gold reserves actually being gold-plated copper bars. What appeared to be a sudden collapse had actually been years in the making, concealed by layers of deception and continuous siphoning of money. Based on the clues disclosed by the media and victims, it's clear that Yongkun Gold had already transferred most of its assets. Some funds were diverted to high-risk investments like stocks and futures, which may have already gone bankrupt. The rest were transferred through overseas accounts or affiliated companies, and their whereabouts remain unclear. Investigations show that several months before the explosion, Yongkun's executives frequently traveled abroad and began selling off personal real estate. The so-called large gold reserves were likely just a smokescreen to deceive investors, with most of the funds already transferred or embezzled. As for whether the insurance companies that insured Yongkun's gold business need to bear responsibility, this requires further distinction. Many investors mistakenly believe that having insurance guarantees safe and profitable returns. In fact, this is a major misconception. Most of the policies provided by Yongkun were property insurance or logistic insurance, which only covered losses during transportation or storage and do not cover operational risk, investment losses, or company closures. If the policies do not explicitly guarantee the return of investors' principal and profits, the insurance companies are not liable for compensation. Currently, several insurance companies have publicly stated that their coverage responsibility is limited and that they are unaware if Yongkun actually held sufficient gold assets. So even if investors file lawsuits, determining responsibility will be extremely difficult. Reports have mentioned that the company even used gold-plated copper bars to deceive customers into thinking they were real gold. The so-called custodial gold was, in many cases, merely virtual numbers in the app's backend, and investors never saw any physical gold. This is a classic scam model. First, real gold is used to build trust, then virtual assets and high returns are used to continuously entice customers to invest more funds. So the vast majority of investors only receive a string of numbers in the apps or a so-called virtual holding certificate. Only a few could redeem some gold bars after making an advance appointment. Some of these gold bars were real, but the quantity was very limited, and the withdrawal period was continuously delayed. By the time gold prices surged, it was almost impossible to cash out. However, the fundamental cause of this large-scale gold explosion event is not how sophisticated Yongkun gold scamming methods were, but rather the lack of supervision behind it. It is the complacency of the government and departments that allowed the scam to breed and spread for so long. The Yongkun gold scam lasted for more than a decade, with oversight essentially non-existent. Simply explaining this as negligence is hard to believe. Although there is no direct evidence, the fact that it was able to operate illegally for so long without being investigated exposes systemic regulatory flaws in quasi-financial institutions and potential collusion or benefit transfer, which is not uncommon in China's financial market. As early as 2018, the People's Bank of China introduced the interim measures for the management of gold accumulation business, which clearly prohibited non-financial institutions from engaging in financial gold business. However, Yongkun Gold used consumer purchase contracts as cover, disguising wealth management products as physical gold transactions and intentionally blurring the line between buying and investing. Since gold is neither a standard security nor completely equivalent to a wealth management product, a gray area emerged between local financial regulation and central bank oversight. Additionally, Yongkun only had jewelry sales qualifications but used the brand authorization plus physical retail franchise model to open stores in various locations. These franchisees did not have financial licenses but were effectively responsible for the sale of gold assets, customer fund management, and rebate payments, thus forming a de facto branch financial institution. However, since it was registered as a retail enterprise, local market regulators failed to recognize its financial nature in time. Several insurance companies such as King Insurance, People's Insurance, and Taiping Insurance provided Yongkun with so-called gold asset protection policies, giving it a green light to its scam. These policies only cover logistics or loss-related incidents and do not assume responsibility for fund payment. However, ordinary investors mistakenly believe this was financial insurance. With the lack of regulation, the failure of insurance agency to conduct due diligence, and the potential for benefit transfer, it raised doubts about whether there was collusion. In fact, it is a common scam across China for jewelry stores or gold investment platforms to suddenly close and flee, leaving customers empty-handed. In March last year, several franchise stores under Shandong Gold and China Gold also suddenly closed and ran away. It caused thousands of investors to lose contact overnight. unable to withdraw the funds they had invested or the gold products they had purchased, ultimately leading to a huge loss exceeding 400 million RMB. The furthest reaching impact of these scams comes from the complete collapse of trust. A societal trust crisis has spread from the financial market to broader areas. This is not just the bankruptcy of trust in a single platform, but a profound questioning and disintegration of the entire system and social relationships. First, it's the bankruptcy of trust in the platform. Many investors were attracted by Yongkun's offline stores' upscale decor, uniform dress code, and even the ritual of sending gold bars, mistakenly thinking this represented strength and legitimacy. However, the truth ultimately proved that this was all just a carefully packaged scam. After this, even legally compliant institutions will find it difficult to easily regain investors' trust. Second, it's the collapse of trust in the system. Insurance policies issued by companies, promotions by well-known media, and standard complete contract documents were once seen as compliance guarantees. However, when the scam was exposed, these seemingly reliable endorsements all turned out to be empty. The regulatory system and enforcement capabilities were unable to substantively examine these actions in time, leading to complete public disappointment. Finally, it's the rupture of trust in social relationships. Yongkun heavily relied on word-of-mouth marketing, with many investors being introduced by relatives, friends, and colleagues. After the truth was exposed, relationships between referrers and those referred became fractured, with tensions escalating, even leading to tragedies such as suicides, police reports, and rights protection conflicts, further deepening social divisions. Currently, the societal trust crisis in China has fully emerged, and its impact goes far beyond the economic realm. Public trust in the government's credibility is rapidly eroding, and any policies or promises issued by the government are facing widespread skepticism, falling into the Tacitus trap, where no matter what is said or done, trust can no longer be gained. The long accumulated contradictions and dissatisfaction are brewing into the soil for localized protest and even social unrest, challenging the legitimacy of the ruling regime. And the Yongkun incident is just the tip of the iceberg.